started recording. For me, not allowed to using. For me, not allowed to using laptop at work. Is it possible that you guys can find time for me? Tell us what work you do. Laptop is down. Oh, wow. Getting all these excuses from. Now me, catch pass. Where are you guys getting all these excuses from? I am genuinely intrigued. Where are you guys getting all these excuses from? We just need you to do it on a big screen. All right. Working as a bellman. Okay. Yeah, then we'll find a solution. All right. We'll find a solution. Maybe we'll have a makeup or yours. Or yours would be earlier. Or yours will be earlier than the other everybody else's own. For those of you guys who have any issue, we'll address it. But for those of you guys that think this will be an excuse for you, if you fail, we'll give you saving grace. Now lie, we're not giving anybody saving grace. If you fail, no certificate for you. Thank God you're even online, so we will not see your face in this place. So you start begging us. Because if we see you now, we might even pity you small. You say, guy, they come every day. Oh. Let's just give him a makeup. If you fail, OT law, nothing for you, no certificate for you. Do you understand? So make sure, can we do the assignment before tomorrow? Yes, but which assignments exactly? Tomorrow is not your exam, it's Thursday that's your exam. Okay, so you have 1 day to go and read every single thing that you need to read before the exam. Nurses, I think you guys too will be put into the consideration. you now don't start. Just how you guys talking about. Rick, I thought it was just analyzing. Are you not going to go and back test so that day you would be active and ready for the exam? Are you just going to sleep and wake up and say, "Oh yes, I'm ready"? If you do that, fine. If you want to go and, when I mean read in this case, I don't mean doing night vigil with your textbook. I'm talking about going back to price action and checking, what's happening, what's working. You know what I'm saying? You can't just, if you're preparing for an exam, you have to remember the type of exam you're preparing for. You get. God help us to pass this exam. No serious rich like that too, but yes, involve and pray. It's not a bad thing, but no serious rich like that, don't worry. If you actually fail this exam, that means you have not been listening to anything we were teaching. There was nothing, see, from the beginning. In fact, the introduction self, you were not even listening. You were not listening for you to fail this exam, because we were very, very nice, we were very lenient, even though we will not give you, even though we will do 60 over 60. Nobody has ever got to 60 over 60, and nobody will ever get 60 over 60. You're still not going to fail. If you fail, that means you were not paying attention at all. Like, out of all the classes in a week, you come only once, and that once you stay 10 minutes, then you go. Maybe you get one shima where they call you for somewhere. For those of you guys who get babe, maybe now your babe they distract you. Me, I don't know, but I know that if you fail this exam, what's the required score? The required score is 70 over 100. If you get 70, you're passed. Back test. Back test is just a fancy word for going back in time and studying price action. Flames, sorry. You fuck up for your test. That means you're not very high in your exam. If not, oh too low. What of people wait up 15 for test? Ah, sorry. I don't get 38 already. So Chinex, you that got 38. Tell me 437. You have to treat yourself. If you make profit, go and buy something you like to eat. You follow the trader. You treat yourself. You treat yourself. You follow your trading plan. You follow your risk management. You follow your break-even protocol. You follow the take profit protocol. You're good. Go and treat yourself. Don't go spend money on top babe head. Babe will not even like you. Go and buy yourself something. 34. Wow. The first one is first. I scored 1 for. How do you even score 1 in a test? Yeah. Hoslomu. Are you actually joking right now? Or did you actually score 1? I got 27. You're good. You need 69 more. Exactly. Which is basically. So whoever said that, I think you should just prepare your mind for the worst. Prepare your mind for the worst. I got 34. That's very good. Now what for you? Wait, you now do the who is this one? Who's asking this question? Say you now do test. No, we don't do test. This is the kind of people I was talking about in the beginning of the class. They only come to class once in a week. So in the whole training, they only come 4 times a month, and they be complaining that they don't understand anything, that we're not teaching well. These kind of people. It's they don't pause speed for your face. Now this kind of person. This is somebody that wants to become a profitable trader. MDXM. People don't change the name to XM. Now, profitable trader, they ask me whether we don't do tests. That's a very clear sign of the type of person you are. I don't even need to talk to you now. I already know the kind of person you are. Excellence shows. Excellence radiates from you. The kind of person you cannot hide it. You understand? Ah. It's still Mr. Glory. It's not Mr. Glory. It's Tristan. You don't try to pour spit for my face. You pour spit for my face. Try. I'm telling you, some people never attend class since we start. Let's just get into the topic for today. So, guys, let's get into the topic for today. Mr. Trishan, how's your brother? He's doing very well. Very well. He's doing very well. I actually have a brother, an older brother. Just older than me by a year. So it's crazy. It's actually crazy. It's crazy. because he's now exactly like, you know, the real brothers are out there. But his name is not Andrew though. But I have another brother. No, he doesn't know me well. I don't have a brother named Andrew. He's just trying to be funny. But I do have a brother. So, guys, let's focus on the task at hand. Is your brother married? No, my brother is not married. I told you he's older than me by a year, so he's not. Like, you know when they marry now for Nigeria, you know, like 35, bro. Let's forge ahead. Thank you so much. I don't want to be answering all this. I want to be asking all these questions. So, guys, let's hit the topic for today. The topic for today is trading plan and trading journal, guys. That's the topic for today. Trading plan and trading journal. I'm definitely sure somehow, somewhere, you guys have heard about trading plan and trading journal before. Maybe one of your favorite mentors from Pakistan has talked about it. But you know, a lot of people don't really hammer on this. A lot of traders out there don't hammer on this. All right, a lot of traders don't hammer on this topic, trading plan and trading journal. It is extremely important, right? Because let me ask you guys a question before we continue. How do, genuinely, like in the baseline, how do traders make money from the markets? How do traders pull money out from the markets? Clear thoughts. How do you think traders pull money out of the market? How do traders make money from the market? We they talk one team, person they talk VIP group. How do traders make money from the markets? How do they make money? By understanding the past? No. That's not how traders consistently pull profits out of the market. No, not removing. Risk and yeah. Buy low, sell high. Yes, we can agree that. We can agree. We can agree on that. The way traders make money from the market, you should follow me now. You should follow me. If they have a strategy that ensures non-random results, if a trader has a strategy that ensures non-random results, okay, if a trader has a strategy that ensures non-random results, that's how traders pull money out of the market. That's how traders pull money out of the market. If you have a strategy that ensures non-random results, that's how you pull money out from the market. Now, let me show you a graph, a quick graph, okay? So this is a graph of time and price, or time and money. So this is money. Let me zoom in. I'm sure on the a little bit too small. See, this is money, and down here is time. Oof, what did I just do? Okay, so where were we? Money and time. This is now time. Okay. So if you have a strategy, that has random results, what would your graph look like in the sense of money and in the sense of time? Your graph is going to look like this. This is what it will look like, because your results are going into the positive, going into the negative, going into the positive, going into the negative, going into the positive, negative, positive, negative, positive, negative. You'll be what we call a boom and bust trader. You'll be what we call a boom and bust. You're not making any progress. You're not making any gains. You're just going up and down. This is what a random result will look like. Okay, this is what a random result will look like. And a trader, that's not something you should have. So this is what a non-random result will look like. This is the same graph. This is the same graph. But with non-random results, even though you have your drawdowns, okay, you have your drawdowns, you have your pullbacks, because losses are inevitable in trading, you'll still be consistently compounding your results, compounding your profits. This is what a non-random result would give to a trader. That's how you pull money out from the markets. Okay, so you need a trading system that ensures you pull money out of the markets through non-random results. So that's why we call it an edge, because an edge is a higher probability, all right, of one thing happening over another. It's not ensuring in that situation one thing that it's a yes or no. No, that's not how it works. In the long term, you can be sure, you have to be sure that in the long term, in a series of 100 trades, in a series of 50 trades, in a series of 10 trades, you would have non-random results. Every single trade, the outcome or the result of every single trade does not matter. Okay, listen closely. The result of every single trade, individual trades, is it trade a win or a loss? It doesn't matter. It's the long-term perspective that matters. Okay, why do you think casinos, when casinos are still running till today, casinos don't close down? Casinos don't close down because they have built a system that in the long term, they will come out net profits. This month, they might be net negative because the system, the random variables or probabilities have made it that they have to pay somebody $100 million in gambling payouts. The next month, it might be different. The next month, it will be different. They don't care. They just know that income with $5 billion plus. So even if this month is negative, they don't care because they know in the long run, they have non-random results. But unlike the gambler, the individual gambler that's playing in the house, right? That's playing in the house, he doesn't have an edge. He's just going there expecting the best, right? I hope this is making sense. That's how they operate. And as a trader, that's the kind of mindset you should have as well. Non-random results in the long term. All right. So that's why I wrote the definition here. A trading plan is a step-by-step system that a trader follows to ensure non-random results. That's all a trading plan is. All right. Moving on. Let's say you were planning to open a business now. You're planning to open a business that sells. You're trying to open a business that sells. You're trying to open a Rolex company, for example. You want to become a brand ambassador for. Now, what the average or the mediocre would do if they want to open a business like that, all right? Or let's say you want to open a business in general, okay? Any type of business. You just want to open a business. You want to start your first business. The mediocre would take their just take their starting capital, literally buy anything, pay for any space, put the stuff in the space, and call it a business and sit down all day expecting that customers will fall out from the sky and give them money. That's what the mediocre or the average would do. All right, they're just hoping on God, quote unquote. Do you understand? They'll just do anyhow and expect outstanding results. That's not how it works. You don't what you sow is what you reap. You don't put in anyhow and get out exceptional results. It doesn't work. You cannot put anyhow and get out anyhow. Do you understand? So the person 100% is going to get anyhow results. Their customers will be few and far between. They're not going to be making too much sales. Their produce will start spoiling. Every single thing will just be wrong until the business closed down, until the business shut down. They say, "Oh, I know if you do it again, I cannot sell again. Nobody wants to buy my product," because they did mediocre planning. They put in very small effort into planning. So the results that came out of horrible planning was horrible results. What you sow is what you reap. Now, the second scenario is a business that spent ample time planning the business before they even funded the business. They spent ample time planning the business. Okay, I'm going to open my shop here. This is my target customer. This is how I'm going to market my products. This is how I'm going to do brand deals so that I can get more clients from so and so area. This is how I'm going to do discounts into the year so that it does not affect my margin. This is how I'm going to do this. This is how I'm going to do that. I'm planning. Then boom, they open the business and it seems like it's an overnight success because they are putting enough thoughts into the business, right? They are not just hoping on God or gambling with the business. Okay, that's why you see the same statistics, right? That 90% of traders fail or are consistently unprofitable. The same thing in the business sector. 90% plus businesses fail in the first, is it 2 years or 1 year? So it's not like if trade businesses are better. Like people will say, trading is risky, business is better. No, 90% of businesses fail in the first 1 year. No matter the type, whether it's online, whether it's offline, they fail in the first 1 year. So there's no escape. Exceptionalism is the only way out of life. That's the truth. The most exceptional win, the most dedicated win, the most consistent win. The ones that refine themselves, that use them, that turn themselves to marble, that treat themselves like marble, that treat their businesses like marble. They craft it with precision. Those are the people who win. Check it. Anybody where they do anyhow, don't get anything for this life. I can guarantee you. Check those your friends or those your family members. You know them. Me, I know them. That they are just anyhow. They don't, to even dress well is a problem. To even dress well is a problem. Those people, check their results, check how they are, check the result they pull out of life. Check the result they pull out of life. You see that they do not achieve much. All right. So it's the same thing in trading. If you're the kind of trader that you wake up in the morning, 12 a.m. time frame, open markets, start drawing trend lines up and down, and expect to print money every single day. Today you reach 5%. Tomorrow you reach 50%. Next tomorrow you reach 75%. You reach your whole account. The next day you are trading smart money concepts. Tomorrow you're trading trend line. Next tomorrow you're trading Fibonacci. Next tomorrow you're trading EMA. The day after that you're trading auction market theory. Before you know, you're trading fair value gaps. Tomorrow you're learning about you now went for seminar. You come see one mentor. You like the mentor. You go pay for a mentorship. You forget your own. You forget what you learn for XM. Go start the learn what that mentor they learn. Before you know, you are now switch your strat. If you're going to be a trader like that, you're putting in random results. You're putting in mediocre results. There's no way, without a doubt, you're going to get out mediocre and random results. Okay, there's no dodging, there's no turning, there's no cheat code. It's going to happen. Okay, so I hope you guys are following. If you guys are following, let me know that you're following. In the discussion group, let me know that you're following. All right, cool. Beautiful. So where am I taking you with this now? I'm trying to paint the picture. I'm trying to paint the picture of why it is essential, why only the best traders treat their trading like a business. Only the best. The 90% are the ones that treat trading like a hobby, that treat trading like something where they just feel like they want to be doing every day. They just like the color of their chart. They just want to look the chart, they press buy and sell. Those ones treat trading like a business. The truly profitable traders, the one that truly consistently pull out money from the market with their edge, ones treat trading like a business. How do you treat trading like a business? You need a business plan and you need a business journal. That's it. You need a business plan and you need a business journal. Okay. Or you can say trading plan and you need a trading journal. You can even call it a business plan and a business journal. Do you understand? That's how important it is. You need to treat your trading like a business if you want to be part of the top 10% of traders. Do you understand what I'm saying? You need to treat trading like a business. Okay. So, moving on now. Now that you have seen the importance of it, so it's not like we're coming here to while away time. You need to treat trading like a business. So now you have seen the importance of it. Let's analyze what your trading plan should have. So the first thing, when you're writing down your trading plan, wherever you decide to put it down, you need to know what markets do you trade. Remember what we're trying to do with a trading plan. We are trying to remove the non out of the random. We're trying to remove the random results. We're trying to remove the random. Do you understand? Ensure results or ensure non-random results, not random results. So that's what your trading plan is trying to do. So I don't know if you guys have heard this quote before. A restricted trader is a profitable trader. One of my most favorite mentors said this, and he constantly says it in all his videos. I really look up to that guy. He said, a restricted trader is a profitable trader. What does restriction mean? Restrictions means, okay, no, I am not doing this. Okay, no, I don't do this. No, I don't do this. 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 Okay, yes, I do this, but I don't do this. I don't do this. The people who live life to the fullest, the people who enjoy life, are the most disciplined. No, okay, no, I don't drink on Fridays. Okay, no, I don't, no, that's haram. Okay, no, I don't do this. Oh, no, I don't, no, I don't, no. Hey, come, no. Anybody that has the ability to restrict themselves and focus on a goal, focus on the task at hand, are the ones that truly enjoy life. Do you understand? So a restricted trader is a profitable trader. So you need to add restrictions into your trading, one way or another. And the way you do it is through your trading plan. You restrict yourself. You block out the noise. You block out the unnecessary conundrums, right? You block it out. Do you understand what I'm saying? So market you trade, you decide the market you trade. It's not that today you'll be trading crypto, tomorrow you're trading Forex, next tomorrow you'll be trading stocks. Before you know, you're trading government bonds. I don't know what the heck you're finding in government bonds, but because the thing get charts on TradingView, you go search them, you go start a draw that block. I know some of you guys will be able to will do something like that. Do you understand? So markets you trade, decide, okay, this trader keep the most profit, the trader that are vastly profitable, that consistently pull money out of the market. A perfect example is CEO. Do you see CEO hopping from asset class to asset class? Today he's trading commodities, tomorrow he's trading stocks, next tomorrow he's trading indices, government bonds, in crypto. No, he trades only the crypto market, selectively the crypto market. Only. Market. If you want to trade any other asset class, you decide that you want to trade it, but you need to specify on what you trade. You need to specify. So you are restricting yourself now. So if you see yourself going to gold, or going to silver, or going to platinum to go and trade them, or going to Apple or Amazon stocks, you are deviating from your trading plan. And what does deviating out of your trading plan do to you in the long term? It ensures random results. That's what deviating from your trading plan does. You're now adding the random variable into your results, which means that you're going to tweak your result a little bit. Do you understand what I'm saying? So you need to choose the asset class and the market you trade. Then the next one is the pairs you trade. Crypto has over 1,000 pairs on crypto, like normal crypto. The pairs are too much. Like, they know they finish. Go and select your favorites. Write them down, 30 pairs that you actively trade, because you know you're a day trader now. So you need to choose the pairs you actively trade. Okay, you need to choose the pairs you actively trade. Not today you'll be trading Solana. Tomorrow you'll be trading Ethereum. Next tomorrow you'll be trading Popcoin. Tomorrow you'll be trading Trump. Next tomorrow you'll be trading Melina. Tomorrow you'll be trading Colina. Before now you're trading everything and anything in the crypto space. You're not even doing due diligence on the pairs anymore. Doing your research on the pairs, jumping between pairs, drawing other blocks, and hoping for the best. That's not how you trade. That's not how you trade. Okay. Now, the advice I will have for you, is that every single day, before you decide to, you're ready to trade. When you're ready to trade, all right, traders will want collect better or pay. Now them they do that thing. Traders will want where they want market give them a pay. Now them they jump around pairs. So the best thing to do, now you guys should listen. The best thing to do as a trader, if you want to select the pairs to trade for that day, go to Bybit, go to Wix, go to Binance. Okay, you guys should listen closely. Go to Bybit, Binance, Wix, the top exchanges, and check for the hot pairs, the pairs that are currently trending. You see the trending pairs today. Go select 10 of those pairs, 5 of those pairs, 3 of those pairs that you're going to trade for the day, because for that day, those pairs are hot. When they mean hot, they mean people are pumping in billions of dollars into the pair. Do you understand? So use that as an avenue. Don't just wake up one morning and just decide to trade Opwe USDT .p. Tomorrow you're trading T.P. Anything we get perpetual contract at the end, you don't trade them. No. Use that as an avenue to restrict yourself. So you can now know, okay, now I'm trading high volume pairs with high volume. Okay, pairs with high volumes. I'm trading pairs that are hot now. They're popular. So that means a lot of people will be trading these pairs. I mean, there'll be a lot of liquidity. There'll be a lot of volatility. Do you understand? So you don't go and trade one pair that does not even have market structure. You're trading a pair that the market structure of the pair is like roof. They like square. That's not the kind of pair you need to trade. So go do your due diligence with this secret I just told you. The next one is starting capital. Now, as a trader, you need to decide what starting capital you're going to start with. All right? What starting capital you're going to start with? How much do you have that you are okay with using to learn trading? All right? Blowing accounts as a trader is a normal thing. Even the best lose money. All right. It just depends. The blowing accounts, quote unquote, means you are going very, very aggressive on the accounts and you risk too much on the account, so you blew it. Okay. If you are risking 1% of your account, there's no way you're gonna blow your account if you're risking 1% or 0.5%. Okay. So don't be afraid of blowing your account, but just make sure you choose a specific, like a fixed amount of money that you're going to fund and you're going to use to learn. all right, that you're going to fund that you're going to use to learn. So decide that by yourself. Is it $1,000? Is it 10,000? Is it 100K for those of our working boys with us? And in the midst, whatever amounts, right? Whatever amounts, put it in. Okay, but you need to specify. So tomorrow, if you go $400, you go blow 80. I'll be like, hi, Jesus. I just fund another one now. You now fund again, blow that one, fund again, blow that one. No, you need to specify how much am I starting with? How much am I comfortable with risking? How much am I comfortable with losing? This money that I just funded with, if I lose it all, am I going to die? Will my life be over? That's how you should be reasoning. All right? Yes, you feel. How much are you risking that you are comfortable with losing? That's the logic. How much are you risking that your boy Aji? Ask a question before we continue. I don't blow my rent money. Don't worry, that one. Every trader needs that kind of experience. You need to blow money that is not your own. It's a learning. It's something you tell your children. Don't worry, no fear. Baba say he dey risk $30. Now it's rich. Bro said he lost. You see why you need a trading plan. Somebody planned on losing $30. Baba came out at the end of the trading day with a negative $100 loss. Would you imagine? What kind of BS risk management is that? What kind of plan losing 30? How does that even happen? Where is the guy that said he wants to ask a question? You're the reason why I stopped talking. Starboy Aji, ask the question so we can proceed. I don't blow money where my mama one used. Can I take my exam by 8 a.m. Nigeria time? Okay. Do you have the admin's number? Please send a message to her about that. Send a message to her. If I lose anything like this, now you don't be that's not how I should be. You're not supposed don't be. You're supposed be. Do you understand? Anyhow you won't do them. You won't go bump. Anyhow you won't go do them. Go do them. Gather funds so you can use and trade. Don't be saying you don't be. You know be. You know be. Never give up. Anyhow you go hustle. Anyhow you want hustle, go hustle. Where is my question? From bank info. What do you mean bank info? Savage. How much you start? Okay, so I am 3+ years into my trading journey. In my first year, I was blowing $10. Like $10 was not even money. I can't even see till today. I can't even count the amount of $10 I've blown in my life. I can't even count. I don't blow $10 tire. That's what I used to learn. Then I was blowing it back to back to back to back. God, my first trading year was the worst period. My first trading year, it was the worst period of my life. How are we gonna know the pairs that are trading on Bybit and Wix? Just go to Bybit, go to perpetuals, or go to search pairs. You see it. Go to Bybit. Okay, let me even confirm it now, Seth. Go into Bybit, then click on markets. and you see favorites, hot, new, gainers, turnover, opportunities. Even on the search button, you will see pairs with fire. You see pairs with fires on the left of them. Those are trending pairs. Like for example, DM USDT, G7 USDT, Layer USDT. All those pairs are trending pairs. In Bybit as well, they are showing BTC is trending, Ethereum is trending, Solana is trending, XRP is trending, ADA is trending, MNT is trending, Trump, Doge, Litecoin, CMETH, Apex, SUI, Pepe, GPS, STETH, Solve, Virtual, B3, SIP, Ton, AVAX, Peanuts, ENA, Link. They will show you the pairs that are trending for the day. That's how you select it. All right. That's how you select it. Yes, now $10. I didn't want to risk too much, but I knew that I needed to put in enough. So starting with $10. No, starting with $10 is not okay. Because you cannot be, yes, this is it. You cannot do proper risk management on $10. So $10 is not good enough. Yes, I agree. But you cannot also be rich without good edge and psychology, golden. So you choose. Now that you're in your beginning stage, you want to fund with the big money and then blow it because you're a beginner. You need room for errors. You need room to test yourself, to shake your body small before you stand. Do you understand? I'm not saying go and fund $0.5 and say I'm taking it to $1 million. No, that's not what I'm saying. I'm saying you need to put in an amount that is not too large and is not too small. That's what I want you to do. $100 is perfect. 500, perfect. 1,000, perfect. If you're entering into the four figures now, okay, it's also fine, right? It's also fine. 1,000, 2,000, 3, 4, 5, 6 to 10K is fine. For those of you guys, are working boys now. Maybe you need order that does not seem like too much money to you. You get my point? I don't want the money to seem like it's too much money for you, like it's the money long. You get the money long. No. I don't want the money to be like, Jesus, money long. I'm telling you, K just spoke facts. Good money without knowing what to do would send you straight to the village. Is it not somebody who online allegedly said that he lost $3.7 million in the market? If you know, you know. If you know, you know. One popular person that was complaining up and down online that he lost $3.7 million. Did the person not have the capital? Did the trader who he assigned to that capital not have the capital? The capital is then at $3.7 million. What are you talking about? $3.7 million is massive money. Massive. That's a lot of money. That's not, at some point, capital, yes, would be an issue. But you need to first have the strategy before capital will become an issue. You need to have the psychology. You need to have the edge inside you before you now start thinking that, this $100 where they trade is too small. First make the $100 back before you now say, okay, let me up. Or make the 1,000 back first. Have you ever lost money? Have you ever lost money that to close the loss, like to swipe to close the loss, your hand is shake? Have you ever lost money? Have you ever lost that amount of money before? That to close loss, your hand is shake, like your hand is shaking. If you have not lost that much, don't worry, you do okay. You're starting. You lost the lose. What do you call that thing that's on a bike? That's for people who Cry. See, the money that I lost, my own make me see the kind loss. There's the kind of loss you take, It's the kind of loss you take. You go even think to take personal loss. No. See your hand. I say your hand go dey shake to close the loss. Your hand go dey shake. Do you understand? Your hand go dey shake. That's the kind of loss I have taken in my life. You'll be like, Jesus, now me lose this kind of money. Wait to or more. You go just dey look ceiling for like 3 hours. You go just dey look ceiling. Say, God, what is it? You go just dey look ceiling. Or if you have a balcony in your house, you just go to the balcony and be like, oh God. They look outside, they see the cars pass by. Then some kind thoughts could enter your head. I be make I just jump off this balcony. So my bed, let's say, that God is calling you. Let me just take the leap of faith. Jump off the balcony to greener pastures. You understand? It all happens, man. It all happens. It's unavoidable. It's unavoidable. I never learned risk management then. At all. At all. What I want to start profit my funded while leaving the capital in my derivative account. That's a good plan. Chinex. $100 is perfect. Moving your capital to your funded is okay. So you're compounding it, all right? You're compounding it. That's a good idea. They show me 500%. I just they pray make it reach like. See, whoever wrote this thing, Shadow Monarch, when he reaches 10%, you're still not going to close. That's just human nature. You were losing minus 500%. It comes back to 10%. You're not going to close at 10%. You still want it to say, this thing go reverse. So let me just close out at break even. I promise you that's what you're going to do. I promise you. You say, it's just remaining small. I'll give you some room. You're not going to close at 10%. If the 500% you're losing is making your hand shake, and you're seeing 10% loss, you're still going to be like, oh yeah, let me just allow it to just flow. You're not going to close at 10%. Say if I were you, I'll just come on my mind from that money. I don't go am like this, collect from the variety, put them back. I am a chosen Shadow Monarch. Sorry. The market na God on his own. At the joke, sha. But the market is brutal. The market is brutal. He no send you and your papa or you and your prayer. As from today to tomorrow. If that trade wants to hit your stop loss, it will hit your stop loss. If you don't want to hit your stop loss, it no go hit your stop loss. Do you understand? Prayer no dey move markets. Maybe it doesn't. I don't know. I'm not saying remove God from your trading, no. That's not what I'm saying. Oh God, oh. But don't rely on prayer as your part of your strategy. That when you place the trade, you'll be like, oh God, please. God, I beg. But they do gandusa. Whatever type of prayer you use, Any type of prayer, as you place the trade, you start this kabash, the fire. In fact, after you do, maybe you go after you play the trade, go join Hallelujah Challenge. After I play the trade, go join Hallelujah. It comes out the trade do anything. Because they do Hallelujah. You doing Hallelujah. Just deceiving yourself. Anyway, let's move on, guys. Let's move on. Let's move on. I funded my weeks. My problem is after I funded it and bought BTC on spots, my capital just been running up and down in both spots and futures. I confuse what's going on. You're holding on to Bitcoin USDT. Now, Bitcoin is not a stable coin, meaning it is not consistently stable all year round. It's going to fluctuate, just like the live markets you're looking at. So if you buy Bitcoin, expect the price to be moving up and down. Expect it to be fluctuating. Okay, it's going to fluctuate because Bitcoin is not stable. Excuse me. Bitcoin is not stable. Bitcoin is not stable. All right, so expect fluctuations. Today, Bitcoin can be in 66,000. Tomorrow, it will be 100K. So it's going to be fluctuating like that now. That's why your this thing, they move up and down. It's calculating it based on all the money you have in your account. Are we going to get these trading plan templates? Is this a template? It's not a template now. This one that I'm using right now is not a template. This is just writing. We'll get to the one that's a template, but for now, this is not a template. But so how can we make big profit like $50K to $100,000? Have you made $1,000 in your life yet, Golden? Are trading giving you $1,000 liquid? If you have not made your first $1,000 from trading, then what's your business with $50K and $100K? You have no business with it. It's step by step. It's a journey. All right. If you focus on the thing way far, you won't win. You don't remember them. The truth is, to make the $50,000 and the $100,000 profit is what we call scale. You have to scale. You have to leverage your skill through scaling. That's what you do to get to that level. Leverage your skill through scaling. Whatever level of scaling you want to do, whether you want to use investor capital, you want to use prop firms, you want to use, borrow money, you need to leverage, or you assign a specific amount of money that you're going to over leverage on it. You assign maybe $200, $300, $400. You say, okay, I'll split this money into 3. And every single time I enter a trade with these 3, I would over leverage on it. You just need to find a way to scale up. That's just it. You just need to find a way to scale up. Some way, somehow, you just need to break the first boundary. Maybe because once you hit there's no way you're gonna come back to zero anymore. Once you hit 4 figures and you manage your money well and you continue to compound, there's no way you're going to come back. Cover the remaining for go chop. Later I come see for group CEO post the trade hit TP. God. That one is not knowledge. This one, knowledge doesn't have anything to do with this. Knowledge doesn't have anything to do with this. You're the one that messed up. You were not comfortable with the amount of money you were losing. You were not comfortable with the amount of money you were losing. When you place a trade, you have to be comfortable with the amount of money you are risking. You know, when you say, oh, I'm going to risk $1,000 on this setup, but you see the $1,000, like the market is about to hit your stop loss, you see the $1,000. That's when you remember that, oh man, I don't feel lose this money. Do you understand? Like, let me just close at the $50 loss. Let me just close at the $900 loss or the $700 loss. Do you understand? So you need to be okay with the amount of money you're losing per trade. You need to be comfortable with it, yes. You need to be comfortable with it. You cannot just risk an amount that you know deep down, if this trade hits my stop loss, I don't meow. Nothing for me again for this life. Make I just go my village. So please, I have a question. When you place a future trade where trading capital will be on spot or funding, what? Spot is not a type of trading capital. Funding is not also a type of trading capital. Funding is your capital that you use in Bybits, right? That's where you fund, like the word implies. I don't want to talk too much. Fund. That's the side of the capital that you fund, like FUND. You fund money, right? So that's where you fund it. Then you switch it to your trading account. I think what's the name of the trading account again? Is it the perpetual derivatives? What do they call it? Unified trading. So if you fund this with your funding account, you now put the money in your unified trading account and you trade it from your unified trading account. Don't borrow to trade, though. Don't borrow money to trade, though. Don't borrow money to trade, though. So let's continue, guys. Strategy, broader scope. All right, strategy, broader scope. What's overall perspective? The overall perspective. Do you trade smart money concept? Do you trade support and resistance? Do you trade Fibonacci? What do you trade? What strategy do you trade? All right, this is where we are now. True. This is where we are now. Muhammadu, you're right. We have a lot to cover. This is what we call strategy, right? This is strategy, broader scope. Now, as smart money traders, we trade with smart money concepts. All right, so that's the broader strategy. Why I wrote broader strategy is that I want you guys to understand something. As smart money traders, okay, every single trading strategy, right, is a broader scope for different strategies within it. Okay, different strategies within it. Every single strategy had deeper strategies within it. Okay. Somebody, all right, the coffee that I made, I like it very harsh without sugar. You like the coffee with a lot of milk and a lot of sugar. The coffee remains the same. The only thing that changed was the fact that the coffee changed. The way you made the coffee, the way you mixed the coffee, that's what changed, not the coffee itself. That's exactly the same thing with strategy when I mean broader scope. The smart money concept is broad. What type of smart money concept do you trade? Do you trade with so and so? Do you trade with this? Do you trade with this? What type of smart money concept do you trade with? You're the one that's going to decide that. All right. But as of right now, when you're writing it down, you put in the broader scope. So you write it down, broader scope of this of the strategy, smart money concept. So we're all smart money concepts here. We're all smart money concept traders here. Next is entry. All right. So you label your entry criteria. You enter trading criteria. You enter the entry criteria in the form of a confluence hierarchy. Now, this is what a confluence hierarchy looks like. Can you guys see it? This is what a confluence hierarchy looks like. When I mean hierarchy, I mean order of importance. Okay, that's what I mean. Order of importance. You arrange it according to the order of importance. Now, break of structure is the first most important strategy and first most important confluence. That's why we taught you guys market structure first. The second one is order blocks. All right, so that's the second most important. The third most important is liquidity. The fourth most important is fair value gaps. The fifth most important and the least important is Fibonacci. Okay, this is your confluence hierarchy. So you should write. I believe you should write this down. You should write this down somewhere, so that whenever you're taking a trade, you can just check: does my trade have all of this checked down, or does my trade have 5-4 checked but 3-2-1 not checked? Does it have 1-2-3 checked and 4-5 not checked? Whoever is asking this question, if we did not believe that with what we have taught you, you can represent XM Academy, then why the heck are we here? Or just close now, close office, go house. If we don't believe that what we can teach you, you can stand by yourself. Do you understand? As far as you're a student of XM Academy, you're an alumni of XM Academy, you're already representing us. If you are lucky enough to pass your exam and get your certificate, you have XM Academy certificate. So you're basically already representing us. You're carrying the emblem of XM Academy as you're going. All right. So that question, very interesting question. Okay, that means the capital will be on unified account and we remove. I'm not answering any more questions. Let's finish what we're doing. So, starting capital, strategy, right? Broader scope. Okay, broader scope. What's the broader scope of strategy? Smart money concepts. Okay, smart money concepts. It's the same thing, right? You see, babe. Maybe me, I see, babe. I say, hi, this girl, fine, oh, geez. Do you understand? I'm like, wow, this girl is very beautiful. Another guy is like, I don't see what you're seeing. I don't see what you're seeing. Like, what are you seeing, bro? You don't go well at all. Did the girl change? She didn't change. Do you understand? So that's exactly the same thing. I'm trying to use something that we can all relate to. So the strategy, the broader scope of the strategy remains the same. So the broader scope of the strategy is smart money concepts. All right, that's the broader scope of the strategy that we trade with. Moving on, entry criteria, as I just said, it's confluence hierarchy. Exit criteria. Now your exit criteria can be anything, right? But as smart money traders, our exit criteria is just basically if the market hits our stop loss, the market hits our take profits, if the market hits our break even, or the market hits any of our TP levels. That's basically just our exit criteria. That's the only reason why we get out of a position. Unlike some other traders, maybe support and resistance, if they see the market rejects with a doji candle somewhere, they will close out the position. Or if they see the market's volume in the market drops, they will also exit the position, you know. So those are our exit criteria. If you have any other one you want to add, reasons why you get out of a trade, you put it in. So if you catch yourself leaving the markets, right, exiting the markets for no reason, you're just scared that the market is going to come and hit your stop loss, you can see that you're deviating from a trading plan. And what are the consequences of that? The consequence of that is getting random results. So the next one is invalidation criteria. Now, invalidation criteria that basically means if I see this in the market, the setup I have is invalid. If I had a setup before and I see this in the market, it's invalid. I am not taking the trade anymore. All right. So you decide that for yourself as well. How do we secure, please? When do we secure, please? What do you mean secure? When you see this thing in the market, the trade is invalid. I'm not taking the trade anymore. Okay. So invalidation criteria can be efficiency of a pullback. It can be if you're a trend line trader, maybe the fifth touch of a trend line or whatever, you know. This invalidation criteria is some trade in the market, trade and you will now see the invalidation criteria, because patterns repeat themselves in the market. They always repeat themselves. Constantly, they repeat themselves. Patterns repeat themselves. They will repeat themselves and repeat themselves. Both positive patterns that have a positive outcome and the one that have a negative outcome, they always repeat themselves. So you need to be able to spot them and spot the ones that go against your strategy so that you don't do it anymore. So those ones that go against your strategy are called invalidation criteria. Okay, you need this. Every profitable trader has this. Not every setup will be the best setup. Some setups are like golden apples with poison inside. They look sweet, but by the time you take it, you say, oh boy, I wish I stayed out of the market. Do you understand what I'm saying? So you need to figure that out for yourself as well. All right. Some of you now think saying that your papa own the market. Let me explain what I mean by that. Profit-taking systems, all right? Profit-taking systems is just basic. You think that if I place a trade, the market will go all the way to my TP. No retracement, nothing. As I place the trade, like boom, straight to my TP. You don't think that the market might retrace, so you don't think that the market could come back to your break even. You don't think that the market could retrace. You don't think that the market could give maybe a little bit of consolidation or something. No, that was not your business. I know who runs it. You see, in fact, if you go start, they do you after you take the trade, you go and be doing a hallelujah challenge. Leave the trade running, thinking that you have $1 billion capital. Now you pump the market. Now you dump the market. You can be float. Some of you people will be floating. If you risk $20, you can be floating $200 profit from $20. $200 profit, and you will not close. You go, they sit down, they think of the kind of sneakers you buy, or the new jeans you're going to buy, or the chocolate you buy for your babe with roses. How you decorate in a bedroom. Now you go, they think that one. To take profit self, you never take the profit though. You don't, they already daydream about all the things you be doing with the money. All the things you be doing with the money. Kai, when I get these funds, cars, price bands, this one sitting on the way they enter my eye. I could go first price them. You know, be like say person go buy them before me. God. Before you blink, the biggest red candle you have ever seen in your life. The biggest red candle you have ever seen in your life will just hit your break even. Boom. After every single thing you have done, after all the profit that you were floating, you just see one big red candle just hit your break even like that. Like you go just they sit. I don't know if you remember that song. That's the song you'll be playing as you're showering. Because you just be thinking, oh God, if I had just taken profit when I saw the profit. You go they bath for like 2 hours because inside the bath, the reason why you don't take profit. Do you understand? So you need to have profit-taking systems. The truth is it can go both ways. The market can actually consolidate, then push all the way to your TP, and you will never need to take partials. It will be very quick. It can go both ways. It can go both ways to your benefit, and it can go both ways to your despair. But you have to prepare for the time that it can go to your despair, just as much as you prepare for the time that it goes to your benefits. So you need a partial taking system. You have two, right? You have three. The first one is fixed. 1:3 risk reward, I'm taking partials. I don't care. Anyhow, the market reaches 1:3, I'm taking partials. The second one is market structure. All right. The second one is market structure. If the market gives me a break of structure, I will take partials at the break of structure. The third one is or more. I reach $50. I'm seeing $300. I am okay. You gauge the profit with your mind. That's the third way of doing it. You gauge the profit with your mind. You say, oh, more, this money go well. Oh. I beg, I collect them back. That's how you do it. That's how you do it. So those are the three partial profit taking systems. You have the fixed partial profit taking, you have the market structure, and you now have the gauge. Now when you go use your chest, in fact, as your chest they beat. If your chest they beat fast as you see the profits, just close out. So you choose the one where you want to use. The next one is break-even protocols. Break-even protocol is just basically moving your stop loss to your entry price or just a little bit above your entry price. All right, so you need to have a break-even protocol. Some of you people will go and be risking 90% of your accounts. If the market just push small, let's say you took an entry here. This is the line. This is where you took an entry. Wait. Let me draw the line. This is the line you took an entry. The market came down, mitigate your entry, and see. Now here market stop. Boom, you don't break even. Bruv, the market has not even gone anywhere. You're already broken even. If the market decides to retrace now, one final time before moving up, so you need to know where you're going to break even, why you're going to break even, and just before the move happens. And if it's too late, then the market can most likely just come back and hit your stop loss. Because if it's too late, the market can just retrace all the way back to hit your stop loss. All the way back to hit your stop loss. So you just have to check like which one is okay, which one is the perfect one. Me, I would advise you to use after your break of structure on your lower time frame, break even. If you enter the trade on the H1 time frame, you go down to your M5 and you have seen the M5 give you a change of character break of structure, you can break even. Or you see your M15 give you a change of character break of structure, you can break even. Okay. Next one is trading hours. Trading hours. This one, as crypto traders, you can trade 24/7. All right, you can trade 24/7. Anytime when I can give opportunity, give the market back to back. You understand? So trading hours is just basically for anybody who is looking, to go into any other asset class, because other asset classes like Forex, stocks, all those kind of things, they have specific time where there's a lot of volume, and they have time that there isn't any significant volume in the market. So you need to know what sessions you're trading. Okay, what sessions you're trading. So that's trading hours. The next one is number of trade opportunities a day. All right, number of opportunities a day. Now, what do I mean by number of trading opportunities a day? I mean, how much losses can you take in a day? How much losses can you take in a day? How much losses can you take in a day? Can you take two losses in a day? Can you take 3 losses in a day? Can you take 4 in a day? Psychology goes spoil you. Do you understand? Because you need to watch yourself. And the truth is, after a specific amount of losses, your mind, your psychology would be all over the place. If you take a loss based on your edge, okay, it's fine. You can take another trade. If you take 2 losses based on your edge, close your laptop. Close your laptop. In some proprietary trading firms, like these hedge funds, these banks, institutions that hire traders, right? Give them capital, give them fixed salary. Oh God. After a series, okay, let's say in a week, you have a back-to-back winning streak in 1 week. They will send you off. You take a break for the next week. You take a break for the whole next week. You take the whole next week as break because now you just had a back-to-back winning streak. And if you have a back-to-back winning streak, your emotions are going to come into play. Your emotions are going to enter into your trading. Okay, your emotions are going to enter into your trading, and that's not something you want to happen. That's why whenever they take a winning streak, they send them off. So you can go and do anything you want to do. All right. After you're still going to get that week's pay, but you're not going to be allowed to trade for that whole week. Go and rest. You understand? So now that's vacation you won't carry your babe go. If you run out. That car we won't buy for her. If you buy them. If you do you understand? So anything winning streak, they will give you a break. The same thing, losing streak, you will still take a break as well. If you enter a hot losing streak, back-to-back losses like this, back-to-back losses, they'll give you a break. They also tell you to go on a break. Okay, so it's just the same thing. You need to gauge the amount of losses you should be. You think your psychology can carry. If your head hot, your head strong, because if you're walking boy, your head strong. You understand? 5 losses, maybe only 5 losses. Somebody's own can be 3, somebody's own can be 2, 1. Some people say they don't want to lose. If you're that kind of person that you're like, I don't want to lose money in the market at all, then position for a cleaner opens up. I'll call you. I'll send you a message. If you're somebody that's trying to learn how to trade and you don't want to take a loss at all, don't worry, I go look for cleaner work. Any opening where I say I go hit you up, no worry. Perfect. This is a perfect example. No, why would they sack you? They wouldn't sack you because they know that losing streaks is part of the process. It's part of the game. It's part of the game. Do you understand what I'm saying? You losing streaks, like if you truly believe trading is a probability game, then whenever you take a losing streak, you're not going to become emotional because you know that sometimes the probabilities, and 500 of them will be wins, 500 of them will be losses. Do you know the mixture of winning streaks, losing streaks, and wins and losses inside of that 1,000 trade series? Are you guys paying attention? Do you know the ratio, how it's being aligned? Of course you don't know. Of course you don't know how it's being aligned. You don't know the ratio to wins and losses. You don't know how they are going to be distributed around the 1,000 trade series. The only thing you know is that 500 will be wins, 500 will be losses. So if you get 6 trade losing streak or a hot losing streak, it's just part of the probabilities game. Eventually, if you really, truly deep down have an edge over the market, it will bounce back. All right? So kudos to you. I even respect you more, Seth. Now, whoever said that thing, who said that thing? Abba Kindler. I respect you more now because some people are so afraid to put on trades that they don't lose. Neither do they win. But you're taking trades. Do you understand? You're taking trades. And that's a good sign. So keep it up, man. Keep it up. Anyway, let's move on. Next thing is trading goals. That's what we're talking about. Trading goals next. Trading goals, what we're talking about next. Now, some of you guys have already seen what I have written for trading goals, and fear catch you. So I don't see what I don't write for my trading goals, and fear catch you. Don't worry, none of you guys are my exes. What are you afraid for? Why are you scared? Are you my ex? Why are you fear? Oh God. So monetary goals. Now there are two different types of goals, right? In the self-improvement niche, there are two different types of goals. The first type of goals are the monetary goals. The second type of goals are the growth goals. Now, the monetary goals are the goals that basically act as motivation. They push you to become the kind of person that will achieve those goals. They push you to do what you need to do to succeed. That's what the monetary goals are for. It's motivation, basically. That's the monetary goals. What do you want from life? What do you want from life? What do you want from life? Some of you guys cannot answer this question. What do you want from life? You guys should tell me now. Write it down in the discussion group. What do you want from life? Tell me one thing you want from life. So I go, Golden, this is not what I'm looking for. This is generic. This is generic. What do you like? If somebody asks you now, you see, I knew it. You guys don't know what you want from life. You guys don't know what you want from life. You guys don't know what you want from life. To help support people into tech. Nope. You guys don't know what you want from life. These are all good things, right? Make it specific. Make it specific. Make it specific. Be a profitable trader. That's too generic. 1 million yearly to charity. You see, that's how you write down your goals. That's how you write down your goals. What is financial freedom to you? Financial freedom is like you're just saying words into the air. If an angel wants to pick up this your goals and your goal and take it to God now, you'll be like, okay, what's financial freedom to you? Everybody has a different definition of it. You need to define yours clearly. Do you understand what I'm saying? If you can write down your goal is I want to have a car. Fuck. A car, you just saying I want to have a car is too generic. Right? It's too broad, it's too wide of a scope. But if you say I want to have a Mercedes-Benz E63S AMG bi-turbo with two with red calipers, with moonroof, with starlight, ambient lighting, with what else? With bi-turbo V8 engine. I need a spoiler at the back. I need convoys behind me. You can see how specific it is. So for those of you that are telling me financial freedom, I want to be a profitable trader. No. Tell me how, make it specific, make it emotional. Be one of the best in trading. That's too generic, bro. What does being one of the best in trading mean to you? What does it mean to you? I want to become the top 10 crypto trader in the world. That is still too generic. Buying cars, buying a house, having a crypto foundation, marriage. Marrying who? What does the girl look like? What state is she from? What's ethnicity? How would you find her in your dream life? Everything goes perfectly. How would you find her? What is she? Is she Nigerian? Is she Asian? Is she Jamaican? What's spec? Your crypto foundation, where is it? How much is it valued at? Who owns it? Building a house, what type of house? 5 bedroom, 4 bedroom, 3 bedroom, 2 bedroom, self-contained? Answer me. You want to build a self-contained? Buying cars, you want to buy 1997 Mercedes Benz? You have to be specific. You have to be extremely specific. I want to have 5 PJ, 5 private jets. What's the spec of the private jet? Which one do you like? You know, there are different types. There's Bombardier, there's Boeing, there's Airbus, there's Embraer. You know, me too, I've done my research. Go and check. What type of private jet do you want? I want to be a better person. It's like you guys are not listening to what I'm saying. Carry the camera, come. I want 100,000 by the end of this year in trading. $100,000 liquid, $100,000 in your trading accounts, $100,000 profits. That is also still generic. I want to be making $1 million monthly and build a cybersecurity firm. Now that's more like it. I want to buy a customized Lambo with my name labeled in gold underneath the car. Why underneath the car? Who go see how? Who go see how if it's underneath the car? Now this car you call, I want to Mercedes-Benz E63. That's my dream car. Don't worry, mark my words, I'll cop that car. Remain small. I want to make about $5,000 to $10,000 monthly as passive income in the next 10 years. In 10 years, I want to be so rich that I'll disappear. Elites of the elites. Something just changed. I want for you. I want to make my mommy proud. How do you make your mommy proud? What's your mommy proud of? What makes her proud? You write it down. I want to have houses in different countries in the world, 100 cars, polygamous family, $100 million net worth. $100 million net worth, good. Polygamous family, no, that's too generic. 100 cars, too generic. Different parts of the world, what part of the world? Too generic. You have to be specific. Where in the world do you want to have the house? What type of specs are the cars? The polygamous family, how many wives? How many children? All of those things are in your control. So why not be specific with it? Something that is outside of your control is like, I want to have 4 hands and 4 legs. Now you create yourself. How do you want to make yourself have 4 hands and 4 legs? Do you understand what I'm saying? You cannot do that. That's not in your control. That's not in your control. Unlike all these goals that we're writing down, all of these things are in your control. You have within 2 years, I want to have a metric of an average of 58 to 42% profit to loss. So that's like your win rate. You want to have a 58% win rate. I want to be one guy that's I can't. I want to be the only guy. I want to be the only one that knows is there until what the fuck. Sorry about that language, but that guy, you're not speaking English. He remains small. Okay, doings. I really want to be rich enough to tell people money isn't everything. That's a good quote. Have Cullinan 2024. Now we are talking. Money now. I want to have different businesses firm. Who is this one now? Are you not listening to what I'm saying? An average of in 2 years. This is a good goal. I love this goal. This is a good goal. You want to have a 58% win rate in the next 2 years. This is very good. We'll get to those kind of goals in a minute. All right, so I think you guys are done telling me your goals, but you get the concept now. You need to write down something that motivates you every single morning. So if you're the kind of person that you maybe you wanted to rewatch lectures that day, but because you were feeling lazy, you decided that you were not going to watch lectures. You now open your laptop and see your trading goals. Once you see it and once you read it, you will wake up. You go just like you see my goals. Oh, you go start the run to go and get your laptop, get the things you need to do so that you can start watching the markets again. That's how it's supposed to be. That's how it's supposed to be. Do you understand what I'm saying? In the Bible, right? For those of my Christian colleagues here, there's a verse that says, write your goals that they will be so big, okay? Write them that they'll be so big that somebody that is reading the goals and run. Do you know what it means? That means that it is so big that they cannot comprehend it. It's all those kind of things that you tell your family member that you're going to accomplish and they'll be like, nah lie, you know fits. You know fits. You know fit do that's higher than your capacity. You dey mad. Nobody in this family has ever reached that kind of goal before, and you want to do 10 times 10 of it. Do you understand? So you need to write it that somebody else that reads the goal will run. So the person that wrote the goal now is going to do what? If somebody else writes the goal, that person runs. You will write the goal now, will do what? You would sprint. In fact, you will fly. Do you understand what I'm saying? So that's how you should write it. So let's move on. Now, this is much better. This is much better. This is much better. Have $1 trillion project firms. All right. So moving on. Those are your monetary goals. All right, those are your monetary goals. Now, the goals that will make you achieve those monetary goals is now what you should put your focus on. Those monetary goals are just for motivation. Now, the goals that the monetary goals are just byproducts of the growth goals, right? It's just like saying you want to put on muscle. You want to put on muscle in the gym. You cannot say, oh, my goal is to put on muscle in the gym, and be lying down on your bed and looking at the ceiling and thinking of that time you'll be jacked. No, that's not how it works. You need to eat every day the way you need to eat every day. You need to go to the gym every single day. You need to do your diet every single day. You need to rest and rejuvenate the way you need to rest and rejuvenate. Do you understand what I'm saying? So being jacked is a byproduct of doing these daily habits or doing these weekly habits, right? So that's the mindset you should have now. For those of you guys that are talking about picking, I don't know if you're listening to what I'm saying. You need to have the mindset that, okay, these goals are a byproduct of my daily habits. The byproduct of my daily habits, okay? So an example is achieve a 70% win rate with my strategy. Another strategy is I'll backtest for 6 hours every day this week. The next one is I will read Trading in the Zone cover to cover. Trading in the Zone is a trading psychology book by Mark Douglas. He's the father of trading psychology. Okay, the next one is I will watch all of Mark Douglas psychology seminars. I will review my trades after every trading day, and I'll review my trades after every trading week. Now, I do all of these things. I have and I do all of these things. Okay, that's how I came up with it, because I do them constantly. I always, like, this psychology seminars, I've watched it like 3 times back to back at this point. 3 times back to back at this point. Trading the zone, I've read it like twice back to back. I've backtested for more than 6 hours back to back before. Yes, I have. Back to back, backtest, I have. Journal more than 50 trades, I have definitely journal more than 50 trades. Achieve a 70% win rate. I'm not going to talk about my win rates, but my win rates is just a little bit above 70%. Maybe let's say closer to 80%, right? 80% win rates. That's around there, you know. So you just need to, these are the type of goals you need to have. Growth goals that would cause the monetary goals to be like a byproduct. If you focus on these goals, these ones will just be like, oh, now I have a car. Oh, now I have a house. Oh, now my ex is texting me back. You know, you're just going to be like, you know what I'm saying? It's not going to be, it just happened. They just sprung out of the ground, you know, but they didn't spring out of the ground because you have been putting in the work in these other goals. Okay, so I hope you guys are following. That's just going to be everything, okay, for trading plan. That's just going to be everything for trading plan. I hope you guys are following. I hope this thing is making sense. So quickly, let's move on to trading journal. All right, let's move on to trading journal. Now, trading journal, very shortly, is just where you journal your trades, right? That's just your trading journal. Trading journal is where you journal your trades. The trading journal is where you journal your trades. Now, these are the important variables you need to have in any trading journal you decide to use. If you want to use Notion, because this is Notion, if you want to use Excel spreadsheets, if you want to use Microsoft Word, if you want to use pen and paper, classic. If you want to use your iPhone, I wouldn't advise you to use your iPhone, but anyhow you want to journal your trades, please do. All right. Anywhere that is okay for you, that you fit, that you think is good, please follow it. Do it. All right. So you need to have your pair, you need to have your direction, date of entry, date of exit, outcome, risk reward, P&L, risk hold time. Those are the most essential. All right. You can add any other variable you decide to add is left to you. But these are the most essential. These are the direction, date of entry, date of exit, outcome, risk reward, P&L, risk hold time. All right. iPhone is not visible because on an iPhone, you cannot, how will I say this? It is not, look, reading a book, reading an ebook and reading a physical copied book is still the same book you're reading, no? But the feel of the book, the experience you have, the focus you have reading a physical copy book is far more than reading an online one. Do you understand? There's something about taking whatever you do, some kind of it's just like when you're praying. You know, if you stand, open your eyes and be looking around and you pray, God will still answer. But if you close your eyes, if you kneel down, if you show reverence, there's a difference. You're taking it differently. It's not like the prayer change you. It's just how you did it change. So that's just the concept. Using an iPhone is good, but the distraction, the level of importance you take it with will be very different. So I would advise you use your laptop for this, or your iPad, or for your whatever kind of like big screen device you have. You can even use your TV. Your TV forgets the app. If you use your TV, no issue. So these are the most important ones, right? These are the most important ones. All of these. Any other variable you feel like adding into it, feel free. Okay. So which apps? You can use Notion, you can use Excel spreadsheets, you can use Microsoft Word. I think Google Docs as well. You can create a table, right? See, anything that has the ability to create a table is good. If you can create a table on the app, you're good to go. Okay, and impute data into the table, you're good to go. So finally, you also need to be saving screenshots. This is just a quick example. You can see whatever trade you take, you need a screenshot of the trade so that you can see what happened on the trade. All right, you can see what happened on the trade. So any single setup you have, take a screenshot of the trade. All right, take a screenshot of the trade so that you can always go back to review it. Last but not least is the most important statistics to pay attention to with your trading journal. The first one is win rates. The second one is highest win streak. The third one is highest loss streak. The fourth one is average risk reward per trade. The fifth one is average win hold. And the last one is your average loss hold. Now, your average loss hold is just how long do you hold on to a trade before it hits your stop loss. 5 minutes, 10 minutes, you need to know. How long do you hold a win, an average win? Like on average, how long do you hold your winning trades, your full TP trades? How long do you hold it for? You need to know. Average risk reward per trade. What's the average risk reward you hold per trade? Me, bare minimum is 1:10 because I take partials at 1:5 risk reward, right? And then I leave the rest to 1:10. So bare minimum for me is I need to have the trade reach a 1:10 risk reward potential. Okay, so you need to know yours. What is the bare minimum? What is the bare minimum? What is the average risk reward that you have per trade? You need to know what is your max loss streak. Back-to-back losses that you have taken, what's the maximum it has reached? You need to know. Highest win streak, you also need to know. What is the highest win streak, right, that you have entered as a trader? You need to know. Is it 10 trades? Is it 15 trades? You need to know it, right? Win rates is calculated when you take the number of wins you have taken in a series of trades, divide it by the total number of trades, and multiply by 100. That's how you calculate your win rates. All right, that's how you calculate your win rates. So these are just the statistics you need to pay attention to, all right, with your trading journal. Okay, so that's just basically everything, guys. We've come to the end of the class. All right, welcome to the end of the class. So that's just basically everything for trading plan and trading journal. So if you have any question, just let me know. If you have any question now, just let me know. Let's address your questions quickly before we call it a day. For those of you guys asking for templates, all right, there are many on Notion, many, too much to count. So when you go to Notion, all right, when you go to Notion, go to this app, this area, okay, you see it here, click on templates, then search trading, okay, trading plan. Oh no, trading journal. See, 295 results. 95 results. You want to use all 95? Just choose anyone that sits right with you. Okay, anyone that sits right with you. Choose anyone that sits right with you. You can go through all of them. Choose one. You can also use Excel spreadsheets. I've already showed you guys the most important variables you need in your trading plan. You choose. You can write them down and then use the Excel spreadsheets instead of Notion if you don't want to use Notion. If you want to use Excel spreadsheets, Google Docs, if you want to use Google Docs, pen and paper. If you don't have a laptop, you can even see journal. If you're trading with your phone, you can even see journal with pen and paper. It just depends on whichever one you want to use. But I would advise you use either Notion or I advise you to use maybe Microsoft Word or Google Excel spreadsheets, because those apps allow you to have to create tables, proper tables that you can add variables inside, do calculations, all those kind of things. So I would advise you to use that. You would like your own pass, your template over other templates. I already showed you guys my template now. All right. I told you guys that these are the base ones. Right? Where is it? Yeah, these are the base ones. All right, these are the base ones. See? Pair, direction, date of entry, date of exit, outcome, P&L. These are basically the base ones. But of course, my own private journal, I have other variables that I added into it. All right, I have many other variables I have added into my own private journal because I need I need to track those variables as well. So with these base ones, you can add your own variables into it. Depending on whatever variable you want to track, you can add your variables. Maybe if you want to track fundamentals, you can add a new tab. You can call it text, and you can label it fundamentals. Any other variable you want to add to your trading plan, you can just add it, right? But these are the most important ones. Okay, these are the most important ones. So these are mine. This is mine. All right, this is mine. All right, guys. Don't go and pick the one that they pay for. I don't send you. Choose the free one. Before you go and spend money where you go buy chicken. Or you go use for transport fare for the next 1 month. Go buy Notion templates when you can have a free one. Trading time, please, just a summary. Okay, quickly, a brief summary on this question. The first thing I do as a trader in the morning is check my technicals. That's the first thing I do. I check my overall technicals on the higher time frame, 1 hour, because I trade in the momentum time frames. I trade with the M3, the M5 time frame. Those are my entry time frames. So I check my higher time frames first in the morning. Then if I know that there's an important news coming up that day, I will check fundamentals. Okay, I'll check fundamentals if there's an important news coming up that day. After I've checked my higher time frame technicals, then I know that I am good for the day. Now I have determined my higher time frame bias. I've determined that there's news for the day or there's no news for the day. So I know when to be cautious and when not to be cautious. And that's it, basically. Then I will now be looking for entry opportunities. Pairs, I only trade 3 pairs. I only trade 3 pairs. All right. I only trade 3 pairs. 3 pairs. All right. I only trade 3 pairs. So you don't need 50 pairs to make it in trading. You don't. You don't need 50 pairs. I only look at 3, and it's beautiful, consistent results. Because now I only need to journal 3 pairs. I only need to track the progress of 3 pairs. I'm not adding too much variables. You don't need too many pairs to succeed. All right, you don't need too many pairs to succeed. Okay, so that's just basically it. That's just basically it. Trading times, I'm active 24/7. I don't get trading time. If I am not trading, I am back testing. If I am not back testing, I am listening to something, podcast, whatever. So I'm always active. There's no such thing as trading time. I don't believe in trading time. The grind never stops. The grind never stops. What are the 3 pairs? Bitcoin, I hate Ethereum. Bitcoin, sometimes Solana, sometimes, it just depends on the day. All right, it just depends on the day. Sometimes I kind of switch it up, but you never remove Bitcoin. Never remove Bitcoin. Never remove Bitcoin. All right, never remove Bitcoin. Just switch it up. I'm not gonna tell you the 3 I trade. I'm not gonna tell you the 3 I trade, but never remove Bitcoin. Yes now. Yes now. Of course you use Of course you use. I trade 3 pairs throughout the year. I trade only 3 pairs. Of course you can add more, but I personally trade 3. Since you asked if I trade more than 1, no, I trade only 3. Yes, admin. All right, guys. So much. See you guys next time. If you have another question, keep sending it. Maybe I'll answer them. Maybe I wouldn't. But see you guys in the next one.